Shares of Joby Aviation are down 18% in early trading on Thursday, and there's actually a good reason why the stock's down today. This is really short-term related news. They're raising capital that is going to help fund their growth ambitions long-term. But I want to get into why the stock's down short-term, but why this actually makes me more bullish on the company long-term. This is a stock that I own in the asymmetric portfolio, and definitely the drop is taking a hit for that whole portfolio today. But this is the kind of trade-off that investors have to think about when you're looking at what's the potential for a company like Joby 10, 15, 20 years from now. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And of course, if you want more from me, check out my newsletter. There's a link on the screen and a link in the show notes. So let's just go through exactly what we learned today. And like I said, the stock is down about 18% as I'm recording right now. Year to date, we're looking at about a decline of 17%, but over the past year, still up 31%. This is the release that investors are thinking about today. Joby is raising about $1 billion. Half of it is going to be $600 million in aggregate principal amount of 0.75 convertible senior notes due 2032. So just to kind of shorthand this, they're getting $600 million worth of funding. Their cost will be 0.75% interest rate. So the idea here with convertible notes is that investors, even in the debt, are kind of betting on the upside of the company. So they're saying, all right, we'll take a very, very low interest payment, 0.75%. Some of these are even as low as 0%. But if this works out, we're going to be able to convert these notes in 2032. Here's the details of that conversion right here. The initial conversion rate is 70.4846 shares of common stock per $1,000 of principal note. Typically, bonds are priced per $1,000. So that is a $14.19 per share conversion rate. Another way to think about this is potentially Joby just sold $600 million worth of stock at a little over $14 per share. The other piece is that they sold 52.9 million shares at an offer price of $11.35 per share. If we go back to this is why the market is reacting today. Yesterday, the close of the stock was about $13.30. So the share sale is going to be at $11.35, but yesterday it was at $13.31. So obviously the market basically opened right at that offer price and has slipped a little bit even since then. Now, this is not the first time that Joby has offered stock to raise funding. They've actually used their stock and the rise in the stock price late in 2025 to raise funding. I think something that was really smart for management to do. This is from October 9th. They raised about $600 million, and that sale was at $16.85 per share, sold 35.1 million shares of stock. So if you're a short-term investor, you're looking at what was that offer price? Why are they selling shares? Well, they need to raise funding for the future of the business. But that's where I think you get to the bullish angle for Joby. And let's just go through some of the recent announcements that they've had. This is from December 17th, announced plans to double manufacturing capacity in the US. So they now want to create 4 aircraft per month in 2027. So that's a year from now. Right now, they're expecting to do 2 aircraft per month in 2026, up to 4 in 2027. Their facilities in California and Ohio can actually go much higher than that long term. But this is kind of the runway that we can see right now is what's going to happen this year and next year. And part of the reason that they were raising these funds is they're starting to see demand for aircraft, $1 billion in potential aircraft sales and service, and then also the US government's eVTOL integration pilot program. So everything is kind of moving in the right direction for Joby. Now the question is, how fast are you going to get to the point where you can mass produce these aircraft? To that end, they actually acquired another facility in January. 700,000 square feet adds more manufacturing capacity in Ohio. So again, this facility is going to be part of meeting those 2027 goals, but the goal is to get to more like 500 units of production per year long term. And this isn't just about plans for future growth. This is about actually getting aircraft and pilots into the air right now. They're preparing, this is from January 6th, preparing for the first wave of air taxi pilot training. So this is going to have the simulators that they have are going to have the capacity for 250 pilots per year. This is part of getting to commercial operations. And there's 3 ways that Joby can make money. The reason this fund is important is because it actually allows them to build out the most profitable way to build out the business. So one way they could build out the entire business is just to sell their aircraft. So you build an aircraft that costs, let's say, $1.5 million. And these are just ballpark numbers that we've seen from releases or interviews in the past. And let's say you're able to sell that for $2.5 million. So you make $1 million worth of profit on that aircraft. That's all the profit you're ever going to make from that aircraft, except for maybe some services revenue long term. Another model would be, you know what, we're gonna maybe sell the aircraft, but then we're gonna help run it from an air taxi service standpoint. That's like some of the deals that they have in the UAE and in Japan. So now maybe you have some upfront revenue and margin, but then you also have ongoing revenue and margin, not just from services, but from actually operating those aircraft. The third avenue, and this is what would need the most funding, is actually maintaining control, owning those aircraft, and then generating recurring revenue through air taxi operations. So as you think about the build out of Joby's business model, those are the three options. And management is saying, you know what, we need to build out capacity, we need to get FAA approval, and we want to be able to run the most profitable business model possible. This potentially allows them to do that, raising around $1.6 billion over the past few months. And I want to be clear that we have not seen this in their balance sheet yet. So this is at the end of, I'll just pull this up from a quarterly basis. This is at the end of the September quarter. So the fundraising, the first fundraising I talked about, $600 million, that was actually just after that, early in October. So there's going to be another $600 million on the balance sheet because of that. Then after today, you're looking at about another $1 billion worth of cash on the balance sheet. So ballpark $2.5 billion or so. Let's look at what their expenditures, and I'll do this on a trailing 12-month basis so we get the full numbers. This is the expenditures on an ongoing basis for both operations and then also capital expenditures. So you can see they're spending about $700 million per year. That's going to likely increase. So ballpark, let's say that that's going to be $1 billion in negative free cash flow per year as they're kind of building out this capacity. This fundraising gives them 2, maybe even 3 years worth of runway. That's what investors should be thinking about. You want to take advantage of these high stock prices when you have the time and ability to be able to do it. So Joby did that in October. They're doing that a little bit today. That stock price not quite as attractive as it was a few months ago. But then they've also done this convertible note. That would be a sale at a little over $14 per share if everything works out and Joby's share price does go up long term. So if you're building out this business and you have a negative cash flow business today, you got to think about what's that runway? How are we going to get to this future that we envision? That's why Joby is raising funds today. They don't want to get to a point where the stock continues to dive. Then you get to a stock price that's $4 or $5 per share. Now we get to the situation where a company like Virgin Galactic was. They needed to raise capital early. When they started raising capital, it was too late. And the markets just weren't open for them. You got to raise capital when the markets are open. That's what Joby is doing today. Long term, this is the right move, even though it's resulting in the stock dropping today. Both of those things can be true. So let me know what you think about Joby's move today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.